away for a little while. Just had a bunch of family stuff going on. But I'm back today, and I want to talk about a trade that I took to the upside on NQ here. That it didn't end up being a failed trade because I did end up going break even on this trade. But I also wouldn't call it a successful trade either because I did not make any profit on it. All right, so what I was looking to trade was this hammer candle right here. All right, so the yellow lines are the 3-minute range. And so my trade here was a breakout into, or a reversal back into, with my target was high of day. So we get a nice hammer candle here. We get the increasing outlier volume, which is always a check on the list. If we're not getting increasing and outlier volume both, then generally we are not taking that trade, and I do not consider that an A+ trade. Also, this bullish candle's volume was greater than a lot of the bullish volume we had seen before. So to me, this is a textbook reversal candle. Target was high of day. So we get one important note on this trade too, is this candle closed inside the 3-minute range. What I did not want to see was this candle get inside of the 3-minute range here. As we can see, it got between 92 and 80 right in here. So we did not want to see it get inside of that range and not be able to close inside of that range. So that was something I was also looking for in this trade. So we got to close inside of the range, which is good. So we're going to start looking for an entry. What we want to see, as always, is we want to see bears fail before we enter. So we get a new higher high. We see bears try and push it down. They push it down to this 70s, 80s area down in through here. And then finally we see bulls step in and push it back up. Now my entry was at right around 92. It may have been exactly 92.25 here at the green line as we started to move back up. So we get some decent follow through here up to 723. Like I said, my target was around this 750, maybe 760 high of day, depending on the reaction there. But obviously we didn't get there, and we saw bear step in and start pushing this thing down. Now, another thing I probably should have considered when taking this trade is I was definitely going against the trend. It's rare that I go against the trend. I also think in a bear market especially, and we'll take a look here, this is the daily, but in a bear market specifically, well, if I can get over here, it's very hard to catch the bottoms of these candles. You know, down in here, down in here, down in here, down in here. It's very hard, and it takes a skilled trader, in my opinion, skills that I don't have. Somebody really, really good trader to try and time the bottoms of these candles to catch bullish moves. So that is probably another thing I should have thought about before we got into that trade today. I was fighting the trend. I do feel like in this market, it's probably safer to wait on a bearish setup, which we would have had a few down through here. I did end up taking one of these trades later and making a little bit of profit down here on this candle here, I believe. But still, I wanted to talk about a trade that didn't go our way, because it's just important we review those and think about those in terms of what went wrong, why didn't it go our way, was there a reason that we could have prevented that? Maybe going against trend, but I still consider this an A+ setup. My stop was very small. My stop was at 74. It says 74.75 here, but I believe my stop was actually 74 flat, which it's always the low of the entry candle. For me, my stop is always the low of the entry candle. So yeah,